Good morning. I'm Vince Lanci. This is the Gold Fix Market Rundown. There is breaking news. China has stepped back. They actually sold 1 million ounces last night. Macro shorts are piling into gold. We're going to cover why, where, and how that happened after we go through a couple other things. Let's start with the markets. 10-year yields are 4.13, down 3. The dollar is 99.85, up 21. The S&P 500 is 56.23, up 27. The VIX is 24.11, down 57. Gold is 32.27, down 61-ish. Actually was down about $85 on the lows, so we're off the lows, if you want to say it that way. Silver is 32.37, down 18 cents, well off its lows. I'm liking what I see here very much. Copper is 460, up 6. Again, all that gold, silver, copper relationship, we're going to talk about that to give you a way to understand what's going on that you probably haven't heard in detail elsewhere. Okay, WTI 57.67, down 82 on the back of the Saudis saying, screw that, we're going to keep pumping anyway. Uh, don't tell me there's no deal cut with the U.S. on this. Natural gas 326, up 1. Excuse me. Bitcoin 96,400, up 2,200. The new gold is taking over for the old gold right now. Palladium 945, up 3. Platinum 966, down 2. Gold, silver down a whopping 1.1. It was down only 30 basis points 20 minutes ago. Give you an idea of when the selling backs off on gold, the buying in silver comes in. It's just the more things change, right? Soybeans 1032, up 1 and change. Corn 469, up 3 and change. And wheat basically unchanged bid at 532. All right, there's the homepage. There's the story in the center we're going to cover. We just sent that out to people, to premium subscribers. Left-hand side, Comex Death Watch, you know about that. And why the JP Morgan report is so important, even if it is the sign of a top, short term anyway. All right, discussion 1, gold dives on record Chinese holiday liquidations. That is true. Discussion 2, macro traders begin to short gold, cover silver. Don't get bullish silver. Just know that this cycle is turning, and the next cycle higher, silver could actually lead. Let's hope that's soon. All right, so here's the stories yesterday. Breaking, we just told you about that. We're going to tell you about that a lot more. Founders AM, quick audio chart recap on some observations that we had. Gold physical buying versus back test bears, which is what we discussed yesterday. We weren't sure who would win. Well, it looks like the bears have won today. U.S.-China chances of military conflict now eclipse reconciliation. We don't agree with the handicapping, but we like the analysis. That's basically an assessment that says there's chance of a hot war, big or skirmish, are now eclipsing the chance of pure reconciliation. The likely answer is in between, which is relocation. So manufacturing leaves China, right? We put some of our manufacturing in India, and China put some of it in Vietnam. And the whole thing just kind of like is a workaround for tariffs. And gold back tests argue for a pullback. That was 2 days ago, actually 4 days ago to founders, and 2 days ago to premium. And finance 5209 final. My students have their final exam that's due on Sunday. There's the test without the answer in case any of you want to pit your brains against an MBA grad student. All right, analysis. China steps back, sells 1 million ounces overnight. Macro traders step in. Yesterday marked the first session in some time that China did not open its trading day aggressively buying gold. We speculated yesterday this could be a signal, an overture to the United States. Perhaps a gesture intended to soften the atmosphere for trade negotiations. This would be consistent with Beijing's broader strategic pattern. Overt displays of leverage, such as naval drills near Taiwan, used as proxy for growing or needed political communication. We stand by that. We maintain that. The chart you're looking at there is a zero hedge chart. Easy come. That's the ETF buying going into gold. Easy go. So while we maintain that possibility remains valid, it's valid. A more proximate and operational driver is now apparent. Sometimes you got to get your head out of the clouds and pay attention to what's going on. Goldman's trading desk in Asia noted last night, East Coast time, or in the morning, Asia time, China liquidated what it bought last week ahead of Labor Day holiday. International Labor Day holiday is a 5-day holiday, resulting in total onshore positioning now 5% off the all-time highs. China's share of total open interest in the world remains on the highs at around 40%. That's part of a note that they sent, and we cover that note in the premium post that was sent out, which has some interesting charts that are not readily available in the West yet. And thank you to Zero Hedge for that help there. China has begun selling gold both at the ETF and futures level. This activity picked up last night and directly tied to upcoming domestic holidays. This is not unprecedented behavior. Easy go marks that a similar chart. The red line there is them getting out of open interest. Them does not mean China proper. It means speculators. You may or may not remember over the years I've said that China is central authoritarian economic